Hi, everybody, and thank you very much for joining us today for the updated PEA announcement at AMX Exploration. My name is Aaron Stone. I'm the VP of Exploration at the company. Also on the call with me today is Victor Cantore, CEO and President of the company, as well as Jonathan Garnier, who is our mining engineer at AMX. A bit of housekeeping before we get underway, and that'll give us a bit of a chance for some people to continue to join the webinar. We will be holding a Q&A session at the end of the webinar, so you should see a Q&A button at the bottom of the Zoom window. So any questions that may pop into your head during the webinar, please type those into the Q&A session and we will do our best to get to them. If we don't manage to get to all of the questions, then please feel free to reach out to us at the info@amexexploration.com email address, and we'll always do our best to get back to you. So if you have any questions in both English or French, we'll be happy to answer in both languages. S'il y a des questions en français ou en anglais, s'il vous plaît, mettre dans la boîte de Q&A qui devrait être vers le bas de l'écran. Puis nos projets, c'est évidemment au Québec, puis on est toujours content de travailler dans la belle province de Québec. So I will be doing the presentation in English today, but like I said, any questions in French, don't hesitate. So let's get right into it. Obviously, our qualified persons and third-party data statements, as well as our forward-looking statements, can be found in full on our website. So if you wanted to read those in details, please do visit our website. Just a quick reminder of project location, as of course it remains to be and will always remain to be important for the economics of the project. As you can see here, we are located just 4 kilometers away from the Ontario-Quebec border on the Quebec side, with the red star right in the middle of the Abitibi greenstone belt here, along what we call the Jacoby Deformation Belt. Obviously, right next door to the town of Normetal, which had the historically producing Normetal VMS mine that ran from the 30s to the 70s, mine down to a depth of 2.4 kilometers. So kind of who knows how deep our Champagne zone specifically at the Perron property can get down to. We know these mineralizing systems can be very, very deep. As you can see, we have a lot of existing operations around us, and we'll go into more details about why that is such a big importance for this updated PEA. Like I mentioned, the town of Normetal, where we operate out of the project, all of our ore bodies are only about 5 to 7 kilometers outside of the town. You can see the old rehabilitated tailings facility right next to the town of Normetal here. So mining is very socially accepted in the area. We have extremely supportive communities around us here in Normetal and Val Canton as well. Our core shack and all of our workers live in town, and we also have the electrical transformer station right next to the town, which not only powers Normetal, but also powers the Casa Berardi mine to the north of us with clean hydroelectricity. So today's PEA was obviously built on the updated MRE mineral resource estimate that we released in May of this year, and is obviously one of the main reasons why we were able to improve so much upon the numbers in today's PEA versus our original PEA from 2024. One of the big factors was with the fantastic increases numbers was the large increase that we had in measured and indicated ounces, M&I ounces, where we were at just over 1.6 million ounces now in the M&I category, of which approximately 82% of those ounces were able to be converted into today's economic study. So 2.3 million ounces in total, including the inferred ounces across the entire property. And obviously, the driver of the main value driver of the property continues to be the Champagne zone, where you can see those 831,000 ounces in the M&I category at 16.2 grams per ton. So today, the highlights of today's release PEA want to spend a bit of time on explaining exactly how our vision for the Perron gold mine will be. So you'll see the main differences between our original PEA and today's updated PEA are that we are going for a staged production approach, so 2 phases over the life of mine. Phase 1, as you can see there, is a 4-year, 1,000 ton per day contract mining operation where the product will be toll milled to an existing operation, an existing mill close to us, close to the Perron project in the Abitibi. This second point here, I want to make sure I explain really well. There's an extremely low initial CAPEX for the project for this toll milling phase of 146.1 million, which will be partially offset by gold sales during the pre-production period of 68.6 million. So hypothetically, the CapEx for the phase 1 period turns out to be 77.5 million. So initial CapEx that will, what will need to be raised for the phase 1 period is 146.1 million, but there will be $68.6 million off gold sales during the pre-production period. Therefore, the final CapEx, if you will come out at $77.5 million. So extremely low CapEx to finance. Average annual gold production in this phase 1 period will be a bit over 100,000 ounces at an AISC of $1,165 per ounce. The average diluted head grade is a bit over 10 grams per ton. So during this phase 1 period, we will be targeting specifically the Champagne zone, which is obviously where the bulk majority of our high grade ounces are located at the Perron project. And this is what really allows us to do this toll milling period in the life of mine with such high grades like that. Moving on to the second phase of the production, the life of mine, that will be a 13-year, 2,000 ton per day owner operated fleet with on-site processing. So the mill to be built on the Perron project itself with the free cash flow from phase 1 paying for that growth capital of $191.6 million for that phase 2 build out. Average annual production during this time, during phase 2, is 93,000 ounces per year at an AISC of a bit over $1,000 US an ounce. Average diluted head grade for the remainder of the operation at 4.3 grams per ton gold. And that is once we bring all of the other zones into the production profile along with the open pits as well. So life of mine in total, we're looking at a 17.5-year life of mine for the entire production profile at Perron with a diluted grade of a bit over 5 grams per ton at an AISC of $1,061 US per ounce. You can see the really attractive numbers from today's PEA, and this is at the base case of $2,500 US an ounce. We will see in one of the later slides what happens to the numbers at today's spot price for gold. So at 2,500 US an ounce, we have a pre-tax NPV of almost 1.9 billion and after tax at almost 1.1 billion. Our pre-tax IRR is almost at 100% with post-tax at a bit over 70%. The cash flow, which again is extremely important for the project, pre-tax over $3 billion and post-tax at about 1.1 billion. And another extremely important factor for the Perron project is the payback period. If you see a project with an extremely quick payback period, it's obviously an extremely attractive project. So pre-tax payback period of 1.1 years and after tax at 1.4. Looking at the mine plan from this year's 2025 updated PEA, you can see the mine plan there, all the underground stopes along with the open pits as well. And you can see with the legend there, the grade of every stope. So every pink stope there is a stope that is 10 grams per ton gold or higher. So you can see the really consistent amount of high grade mineralization that we have, especially within the Champagne zone, but also across the remainder of the zones as well. Even 4 to 6 grams, these greenish colors are extremely healthy grades as well. So the Champagne zone continues to be open at depth, and so far has been defined vertically to 1.4 kilometers and remains open. And the plan in terms of the tailings management facility remains the same from the original PEA from last year in 2024, is in the fact that there will be none, and that the plan is to backfill the open pits that will be mined out with the tailings from the processing plant to be built on the Perron site. So this is continues to be an extremely favorable aspect of the project, not only from an environmental standpoint, but also from a permitting standpoint. Going into our 3D slides now that show the updated PEA. Just quickly again, I'll zoom out just to show the proximity of the project to the town of Normatal, which you see in the background here. So far enough away from the town to not disturb its residents, but close enough to be able to profit from the existing infrastructure in the local area. So from the Gratien pit in the west to the Team pit in the east, we have a strike length here of approximately 3 kilometers. So all of this infrastructure is located extremely close to one another, which is another very favorable point for the project. As you can see also, no major lakes, no major rivers to deal with, very flat land, no mountainous areas to have to contend with either. Zooming in now to the proposed process plant, which will be built during the phase 2 of the proposed operation. Nothing here has changed in terms of the setup of the processing plant to what was already designed in our original PEA from last year. And as you can see, remains to be located right next to the underground portal for the entrance to the mine. So everything remains in close proximity to one another. Falling underground now, we've highlighted here the 2 different phases of the operation. So you can see in yellow what will be mined out from the Champagne zone during the phase 1 toll milling operation versus the stopes in blue that will be reserved for the remainder of the operation. So you can see the upper portion of the high grade zones will be mined out during the toll milling phase, and then the rest of the operation continues on its way once the processing plant is fully built out on the Perron property. So during the phase 1 period of the operation, the Champagne zone will be mined down to approximately 500 to 600 meters in depth, and obviously some extremely attractive grades coming out of there during that toll milling phase. And now for everything to look at everything in the same slide. So all the surface infrastructure as well as everything underground. You can see this is a very tight-knit operation, not having to go off to great distances. And another reminder that all of our zones do remain open for expansion. So a lot of exploration potential continues to exist at the Perron property. So to resume the development strategy, again, that phase 1 toll milling period of 4 years at 1,000 tons per day, that then moves into the phase 2, 2,000 ton a day operation with the on-site milling. The first pit will be mined out during phase 1, so that as soon as the phase 2 production commences, the tailings from the processing plant will be able to be pumped into that mined out pit. The underground mining method hasn't changed from our original PEA. So very traditional longitudinal long hole stoping, which is nothing out of the ordinary for the Abitibi, and the expertise already exists for that in the area. You can see our average stope size there on the left-hand side of the screen with an average of 4.7 meters in width, which is essentially kind of your perfect mining width for that longitudinal long hole stoping method. You can see the grades that come out of our open pits are very healthy as well. This is obviously a majorly underground project, being a narrow vein, high grade gold deposit. But the several moderate pits that we do have around the place in the Gratien, Grey Cat, Denise, and Team zones are at quite healthy grades of 2.17 grams per ton. And then you can see our grades for the overall underground operation there as well. So looking at the production profile over the life of mine for the Perron project, you can see in the first 10 years, first 10 years here, we have an average annual production of 112,000 ounces over the first decade of the life of mine. And as another reminder there, you can see that 20,000 ounces that will be mined out during the pre-production period, and that's what accounts for that $68.6 million of pre-production revenue that we can minus off our initial CAPEX. Obviously, the plan moving forward at Perron is to continue with exploration and not only expand our known zones, but continue to make further discoveries on the Perron project and now also on the newly acquired Perron West project. So as the VP of exploration, I have a much larger geological playground to go and make further discoveries now extending across into the Ontario side along the continuation of the Normital Burnt Bush Greenstone Belt. Obviously with the goal in mind of continuing to add ounces to the back end of the life of mine plan here. So to reiterate the CAPEX and OPEX costs, you can see again there the phase one and phase two capital cost requirements. Another reminder that quotations were obtained from reputable suppliers for most of the large and high cost equipment for this PEA, as a sustaining capital of $386 million over the 17.5-year mine life. And you can see the AISC numbers there as well that we previously spoke about. Now moving on to the exciting numbers of what spot price does to the economics at the Perron project. So as a reminder, the base case was set at 2,500 US an ounce. We've used a spot price here of 3,400. Potentially could have used 3,500, but obviously gold prices moved very quickly in the last couple of days. So we've used $3,400 gold spot price here. And just a couple of quick highlights, you can see what that does to the pre-tax total cash flow moves from over $3 billion to over $5 billion at 3,400. Our post-tax NPV moves up from 1.1 billion to 1.8 billion. Post-tax IRR moves up to over 107%. And really a highlight for me personally is that post-tax payback period. We're well under a year now at $3,400 gold. So the Perron project pays itself off in an extremely quick amount of time. To reiterate the highlights of the Perron project and the important points that makes AMX's project stand out. You can see again there on the right-hand side there the vertical nature of the Champagne zone. So this is, if you can see my mouse here, starts at surface and goes all the way down to 1.4 kilometers in depth. See no gaps in the stopes in that Champagne zone. The mineralization is extremely continuous. Given that it's almost vertical, it dips at about 88, 89 degrees to the north. This makes it extremely straightforward for our mining engineering team, and that long hole longitudinal stoping method is your stock standard mining method in the Abitibi. You can see here as well that we've had a vast improvement in the Denise stopes in comparison from our first PEA to the second. We're seeing a lot better continuity in the Denise stopes, which is on the left-hand side of the image here. And even at depth here, this is what we're mining out at depth in the Denise zone. Given its proximity to the Champagne zone, we're easily able to branch across and go and grab those ounces. Another reminder that the metallurgy is extremely strong on the property. So in some cases, we had metallurgical results of over 99% in the Champagne zone. 95% was used in the PEA. So better to be safe than sorry. Site access already in place. Like I said, no need to construct a camp with the towns of Normetal and Lassar already nearby. Extremely supportive communities and First Nation partners for the Perron project that we are always in constant contact with and have a great relationships with. And extremely favorable infrastructure and hydrological power in the area. So just the final slide here, and to reiterate on AMX's vision for developing the Perron project and our vision of path towards production. So today's PEA update is the first step in that path towards production. We will be submitting a application for a bulk sample to the Ministry of Mining and Forestry in the very near term future. So we should have some news out on that in the extreme near term on the deposit of the bulk sample application. That would hypothetically start construction in the early parts of 2026, and we would be extracting those stopes in 2027. The feasibility study, so we are going from PEA straight to feasibility studies. They will be two separate feasibility studies for the phase 1 and the phase 2 portion of the operation. So the phase 1 FS study has already begun. A lot of the work for that has already begun in the background. Considering that we don't have to deal with a mill or a tailings management plan during this phase of the operation, we envisage that this FS should be about a 6-month process. So we should have completed that study in early 2026. A lot of the environmental work and impact studies, etc., that are required for the BAP process in Quebec are already underway as well. If everything goes to plan, we would be in production for that phase 1 toll milling period in the latter stages of 2028. Once all the permits are in hand for that portion of the operation, the feasibility study will begin for the phase 2 full build out of the operation at Perron. And we should be able to be in full production with that 2,000 tonne per day mill by the latter stages of 2032. So that was a really quick rundown of today's updated PEA, and I'd like to open up for any questions that the audience may have. Thank you very much for tuning in. Victor, are you seeing any questions pop up in the?
I don't, but maybe Wanda could see it or somebody else. I see your screen is what I see. On the Zoom.
Victor, in the bottom, the Q&A button down at the bottom of your screen.
I can see a question here that says, have you included ore sorting in the mining scenario? Really good question. At this point, we haven't included it. We have started the testing to see if ore sorting would be compatible, especially at the Champagne zone, considering we have two extremely rich quartz veins either side of a mafic intrusion at Gabbro. So should hypothetically be extremely amenable to ore sorting. So we have done a initial phase of testing there that has indicated to us that it would be amenable to ore sorting, but we have to go down the path for doing further testing. So that's definitely something that we will be continue to look at in the future. What are the estimated transportation costs per kilometer? I would maybe Victor or maybe Jonathan might have the.
That would be Jonathan, not me.
Our transport cost are now rule of thumb is 25 cents per ton or per kilometer.
But it's in that number is already included
built in our model.
It's built in the model. That's correct. And there's another question they're asking about the available mills. There's a lot of available mills in the area to the north of Casa Berardi. You have another 3 or 4 of them in the Quebec side of the Abitibi, and you have a lot more also on the Ontario side. So there is a lot of optionality of where this product would be sent. As Aaron said before, we'll have a feasibility study done just on toll milling. That will be done. That should be completed quite quickly. And there will be at that point we will have a signed agreement where we will be sending it. Right now we're just in discussions. We're just in discussions on that. The other question is, will we be at the Beaver Creek conference? Absolutely, the 4 of us will be there. There'll be myself, there'll be Aaron, there'll be Jonathan Gagne, and Wanda Cutler. We will all be there. It's important that we're all there because you need a mining engineer there to explain all this. We have the geologist, so it's really important. It's really important. There's another question about our cash position. We're currently sitting with a little over $40 million. The other question was how much will we need to complete the phase 1 feasibility study. I don't have an exact number on that, but we definitely have more than enough money in there. The $40+ million that we have, there's close to 15 million of that is hard dollars. So we're definitely it's all, the feasibility study is definitely funded. Did we include silver ounces in this PEA? I'm not sure. If it's definitely not in the economics. This is all pure gold that we're showing. Do we have other material on the project? Absolutely. There is silver ounces. There's also a base metals on the property. It's a copper rich, just like like in the past where there was the Normetal mine, but we have not included it into the economics here. We really wanted to show that this is a standalone gold project. All the other byproducts would be considered as byproducts and credits. This project is strong enough and stands up alone just on gold, so we did not need to do a gold equivalent. There's a question on what would be the timing for the construction decision on phase 2. The Gantt chart really speaks for it. We're really going to try to keep that timing, and the construction of phase 2 with the way it's contemplated right now, it'll be during the same period where we're already toll milling. So it will be funded with growth capital, meaning it'll be funded with the revenues from the sales of gold. The bulk sample process, I mean, it's really permitting. Once you're in Quebec, they call this an ATI. It's a simple, straightforward process. You file it. You'll have to show how it's really test mining. So all the items that you would be doing during mining are pretty much there. It will be a production sized decline. So that what kind of saves you time, because once you are permitted, if you look at the schedule, if the permitting does come through in 2028, normally you get permitted first and then you construct. But because we're applying for permitting for the bulk sample, once your production size decline is ready, as soon as you get permitted for your phase 1, you can jump straight into production. You don't have to wait that year and change. So that would be the answer. That's pretty much the bulk sample. There's two questions I'm going to put all in one, as they both have asked. Is there CAPEX for the phase one? Will we be doing financing? Most likely there will be a small financing. This is really, you know, when you look at the number that's there, it's not a big number. This is something that will be it's tough to say the word easily financeable, but it's definitely a financeable number, which gets you into some serious numbers, as we've shown here in the PA. And as we put out a feasibility study, the numbers will tighten up quite a bit. There's a question of how many drills are turning right now. Drills are going to start turning again sometime in October. Aaron is right now with the balance of the geological team. They're working right now on new targeting. There's compilation going on. There's soil sampling going on. There's a lot of, you know, once you find a deposit like we have right now the balance, there's a big playground. Like we have 45.6 kilometers square kilometers of property just on the Quebec, just on the current project. When you add everything else in Ontario, put it all together, we're at 197 square kilometers. Really underexplored on other than what we've drilled at the Perron project. The balance is pretty much underexplored. So I am expecting that we should make other discoveries. And when you look at this on our PowerPoint, you look at the project. If you look at the most western tip on the Ontario side, all the way to our project, you're looking at 35 kilometers. So all that would be easily transported. Again, this is all. I don't have a feasibility to back that up, but it's, you know, when you look at it, it's pretty much something that can move forward. Are there any pending drill results? There was drilling going on for I guess that's for feasibility studies. There's the hydrological drilling, for rock sampling drilling. So we're going to look at those as they need to take the course that they need to take, and after that they'll send all this rock back to us, and we'll definitely analyze it and report it at that time. But most of the results have been published. But really the story here is that, you know, you have a mine, look at the PA on this, look at the numbers here, move this thing forward to production, start bringing in revenues, and finance the rest of it, finance the rest of your exploration with revenues. But I could add also that the flow through that we've raised is contemplated all to go into exploration slash drilling. And you know, we just recently raised $24,970,000. There was another couple of million, you know, $3 or $4 million left from the previous one. So it's a lot of exploration dollars that we're going to be putting in. So I am expecting for for more discoveries and additional ounces. When you look at this, this PEA, there's a lot of room to add ounces on the back end, and also on the front end, but definitely on the back end of this. So I think I've answered most of the questions that were on there. I believe. If there's any more, we'll wait a couple of minutes, and then I guess we can. And always at the same time, always feel free to reach out. We can always get back to you if you have any additional questions. We'd be more than glad to answer it. I think we can provide, or I think it is on our site, the addresses for investor relations, or definitely the info would definitely work.
Perfect. Well, thank you very much again, everyone, for joining us today. And we look forward to providing Amex shareholders with continued updates in the market as we progress towards production at the Perron project.
Thank you very much for attending and taking the time for our presentation. Thank you, everyone. Have a great rest of the day.
Thank you. Bye.